Hello, welcome back to WINFX Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In this video, we shall be talking about point action infinity profit, no stop loss FX trading strategy, prop firm solution. The things we shall be discussing in this course include valid signal synthesis, aggressive risk appetite, equity allocation, equity management, valid signal point with zero drawdown but infinity profit. Risk reward is equal to equals to 0 is to infinity, meaning that you are risking nothing and you are making infinity profit. Okay, your profit is now function of loss size and equity and not the stop loss. So your profit is not limited by the stop loss, rather it is dependent on your equity entirely and then your loss size. Okay, the equity determine the loss size anyway. Okay, your profit okay, I've said this. Total loss size Z is equals to percentage total risk upon the equity all over stop loss upon the this is a kind of numerator over denominator. The numerator is percentage total risk upon equity and denominator is stop loss pips upon pip value. Okay, the pip value is the cost or the value of a pip in dollar. Okay, the value of a pip in dollar. So every asset have pip value both in forex and synthetic market. It's left for you to know those pip value, but along this video I'm going to show you how to know pip value. Okay, the limit of Z as L approaches 0 is equals to infinity. The limit of Z as L approaches infinity, the limit of Z as L approaches 0 is infinity. Now this Z means the total loss size and L means the stop loss pip. The L means the stop loss pip. Okay, so the limit of Z as L approaches 0 is equals to infinity. In other words, when the stop loss pips is made closer to 0, if we reduce the stop loss pip very fast to 0, not that it will be exactly 0, but maybe around close to 0, you can find out numbers that are very close to 0. We can say that 1 is very close to 0 than 5. 0.5 is very close to 0 than 1. 0.1 is very close to 0 than 0.5. So as the stop loss pip L approaches 0, the limit of the total loss size approaches infinity. Okay, where L is equals to stop loss pip. Okay, now the question is, what is stop loss pip? The stop loss pip is the number of pips the price have to go before you are stopped out, and this will be your entry price minus your stop loss price. Okay, the stop loss pip is equals to entry price minus stop loss price. Okay, it can be positive, it can be negative, but take the absolute value so that it's all positive. Okay, now what is the application of this idea? In prop firm trading, if you are funded by a company to trade, you will discover that they will give you rules that are likely going to make you lose money. Like, those rules are very hard to follow, and you are likely going to buy many of their accounts. Like, you are likely going to buy multiple accounts, because the first one you bought you lose, second one you bought you lose, so you keep buying. So the more you buy, the more they make money. They generate money from you. It's not that they want you to lose. You are the one losing because you don't have this idea. In environments where they give you strict rules, where they give you a very big amount of capital, very big amount of money, but then they restrict you to certain risk level, to certain daily drawdown and maximum overall drawdown. So in a prop firm, it is typical to be bounded by these rules that your drawdown on daily basis, or your daily drawdown, should not be more than 5 to 6%, and the overall drawdown should not be more than 10 to 12%. Now, when you think about this, once you violate any of these rules, your account will be suspended, right? Now, most times you will take, because of the rules given, you will like to be careful, and you will like to reduce the risk. Maybe you'll be risking per trading session, you will risk 1%. Now, when you risk this 1%, most times your TP cannot be able to give, like, your risk reward may not be enough to help you hit the profit target. This is a big account, and they give you a profit target usually higher than the drawdown. Now, for you to reach that profit target with small risk, you might be taking several trading sessions. So the more trading sessions you take, the greater the likelihood that you will be suspended, like that you will be violating those rules. Because if you take 5 trades just because you are not sure of like you are afraid of losing, then there is likelihood you will lose 3 trades out of the 5 and win only 2. And when you are losing like this, and you are not getting to the profit target, you keep taking more trade. So there is this roll losses that can amount to violating the risk rule. You might violate the daily drawdown, or you violate the overall drawdown. So this is one of the application of this course, this content. If you follow to the end of this video, you will actually learn how to be how to be rigid, like how to be accurate, and then have a sudden rise in your risk appetite with infinity profit. While your risk is big, you didn't see drawdown, there is no drawdown, rather you make huge profit. This idea is very, very good when you are trading with prop firm, if you can apply it accurately. Then another way this idea makes sense, another application of this idea, is in your personal trading. Okay, in your personal trading, somebody can have about multiple trading sessions, okay, even on a big account, yet the person is not making good profit. But somebody can have a very small account but with a big risk, with big loss size, and the person make more money than somebody that has big capital, but he's not sure of what he's doing, and so he he reduce risk because he's afraid. Now, so this idea will remove fear, because you know what you are doing. If you are jumping from a mountain to the base, to the ground level, and you are sure that when you jump you will not wound yourself, then there is no need to fear. Someone that will fear is someone that is not an expert, someone that don't know what he's doing. Okay, so this idea does not involve stop loss. We are not placing stop loss because you know what you are doing, and so you use big lot size. If a drawdown exists, it will not be far from zero. It will be within the neighborhood of zero. Okay, so I will go into the practical aspect of this content so that you see what you are going to be learning. You will see it practically. Okay, but this is not a kind of financial advice that you should avoid risk management, or you should not be taking your risk management serious. See, this is just for traders that have enough capital and they want to take risk. If you are having, like, if you are into prop firm trading and you want to apply this idea, you have to be sure that you must have been making money from prop firm, or you have many prop firm account, different companies, you are trading with different companies, and then you just want to apply it on this company, one company, because this is also risky. You might do it and do it wrongly, and you end up blowing your account or violating your prop firm rule. Okay, so I'm going to go to chart and show you how this works. Okay, now this is volatility 75. After synthetic, I'll go to Forex. Now remember the topic. The topic is point action infinity profit, no stop loss, FX trading strategy, prop firm solution. Now, what do you understand by point action? Okay, now what is point action? Point action means existence of an observable change at a point. That change is characterized by a big displacement. Okay, that is point action. An example of point action is this. This is a point action. This point here, a point should be represented by a tiny geometrical something, like a tiny rectangle, a tiny circle, anything tiny. So why we represent it with tiny is within the surface of that representative of the point action, the area where the point, the location where the point action took place. The reason why we use small geometrical object to represent it is that inside the body, like inside the surface of that geometrical object, the price range there, the difference between the upper and lower boundary of the price is close to zero. This is psychological, philosophical idea of trading that some people don't know about. Now, this is a valid point action. This is a valid signal point. What make it valid is immediately this thing happened, then we had a massive pip change of $24,000. I'm sorry, 24,000 pips. Okay, you see, 24,000 pips. That is what I mean by point action. Now, within this geometrical representative of this point action, whose dimension, whose width is equal to zero, the change in the width is zero. Not that it is just zero, but it approaches zero, meaning that the stop loss should be since we are looking for sell, the stop loss should be above this upper boundary. The stop loss is hypothetical stuff. It doesn't exist. The stop loss is actually zero. So you are not placing stop loss. After all, if you want to place stop loss, the broker will tell you that this is not allowed. The stop loss is invalid, right? Yes. But our signal point is what? Valid. So it's all about a valid signal point. A signal point that have a hypothetical zero stop loss and create a very infinite, or like it creates infinity pip change than ever, or than any other pip change in the neighborhood, is what I called point action. Okay, now with $100 account at this point, if you are going to use all your margin, you are not going to take this trade here. You are taking it at that point with that have a zero drawdown, a zero stop loss limit, a zero hypothetical stop loss limit. You are taking this trade, $100 account, you are taking this trade immediately. You are taking it here, $100, and you use all your margin. Remember, you are using any loss size possible that the broker will accept. You have to be fast. Okay, so you can put 0.1 loss size here, then open it by 5. That means you have opened 0.5 loss size, and then the market draw down to here automatically. Maybe after a couple of hours, about 6 hours or how many hours? This is around 5 hours. Draw down to here, and you are seeing around 24,000, close to 25,000 pip. Now, when you see this profit, let me show you how much you should have made. Yeah, I'm back. So if you do the product, you get $12,500 from $100 account, meaning that your current equity will now be $12,600. Okay, that is if you start with $100. Now, if you start with $500 and you were allowed, like the broker allow you to use up to 2 loss size, you have made $50,000 plus. I get it. No stop loss, but you're able to make this. So that is what we call infinity profit. But you are going to blow your account once you deviate from the point action environment. From that point action, whose stop loss pip is 0 or whose width is 0. Okay, now the biggest problem is how to synthesize. If you look at the document, we said something about it. Valid signal synthesis. How do we synthesize this signal? The first thing is to synthesize this signal, and then the second is to have that scale of risk, aggressive risk appetite. Is a skill. It have to be in you. You have to have that skill that I'm gonna risk like this. Then equity allocation, equity management. So these points from here down to here is very, very important. Okay, so let's start with valid signal synthesis. How do we get a valid signal synthesis? How do we get a valid point action? Or how do we get a point where there is probability of getting a valid point action? Where? How do we do that? How do we know? Okay, the best way to know is to predict to predict a valid low or a valid high of the day or of the week or of the month or of the year, depending on the trading platform, if they allow yearly time frame. Okay, because you actually saying that you're actually saying that this is we are selling at the highest price of the given time frame, or you're buying at the lowest time of the given time frame. So this is all about the high and the low of a given time frame, but the time frame should range from daily to the monthly or yearly. Okay, now this is one of the criteria. The another criteria is locating a very valid strong resistance or support level. Take for instance, if we mark this level, so I'm going to start. Let me explain the first one first, which is time frame method. Then after, I'll go to support and resistance method. Now this is daily time frame. Okay, now look at this candle. This is around 12:06 a.m. The day has opened. Now the candle opened at this price. Okay, at this price. Okay, you can just take this risk. Let's say I'm not going to bring equity allocation and equity management and capital allocation. I'm not going to bring it. Let's assume you have a hypothetical $600. Okay, you are going to divide this $600 into three. That is, you will now have $200. Okay, so maybe you carry the $400 and put in another account in your trading site, and then you allocate $200 to this account, to this trade. You are going to strongly believe that this is the high of this candle for this day. So if this is the high, then it's valid. The high doesn't change if it is valid. You can't tell me that this is for this candle. Let's say for this candle, you can't tell me that this is probably, this could be the high or this could be the high. No, that is not the type of stuff we are looking. We are looking for 100% certainty. So this is a valid high. So you need to believe. This is do and die strategy. You need to believe. So here, if I should have, when this price open, I will say, okay, this is not going to create a high, it's not going to create a weak, so it will not create a high, but it doesn't mean it doesn't have a high. So the high will be equal to the open price, right? But it doesn't have a week. If I believe it will not have weeks like this ones, then I'm going to sell immediately the day opens here at the price of, that's the price of 374,020. I'm going to sell, no stop loss. With $200, I will just put, once I put 0.1 lot size and they allow me to sell, I will sell as much as I can immediately before the width of the hypothetical point action zone goes away from zero. That width is supposed to be zero or close to zero. I have to be fast, open those trades until they tell me that I have used all my margin. Then I will rest my case. I swear this strategy is for those that really want to be aggressive. Why I say you should not use all your capital, that you should apply capital equity management and capital allocation, is because it's risky. So you can't just come and risk. Let's say your total equity, your total net worth is $1 million, and you come and risk $1 million. No, divide that $1 million into 5 and take the risk. Most time you can scalp. You can apply this idea for scalping. You know, you can use that as a scalping method. You can imagine you did this at this open price, then you did this at this open price, then by now you should have got around over 2,000 pips. Then you should have made good money. Okay, so this is about candlestick now. But the more the best, when you are using this candlestick method, the safest way is to look for candle that will create wicks. Okay, you look for candle that will create wick. How do you know that a candle will create wick? A candle will create wick when a candle will create wick if it when it open at certain price, and then it creates a body. But when it creates that body, it reaches certain price level along the body and started forming a wick. It will form this wick and destroy the wick. It will make the wick and break the wick. Like it will, like you see what it's doing here. Initially, here was a body, was covered with a body. Now it's forming a wick. Are you getting it? Now, the safest candlestick method is to wait for a wick to be formed, like a price to come to where a wick form, close the wick and form the wick again, make and break of the wick. Now, by then you will not say that this is a valid wick, and then you are going to perform the trade here. Meaning that if this is a valid wick, then you are going to buy, believing that this is the valid wick for the day. So once price come near here, having that, we are talking about zero stop loss does not mean that the stop loss pip is zero, but we are saying that the stop loss pip approaches zero. So if you risk a 500 pip, if you because I've not told you how to calculate the lot size anyway, but I'm going to show you towards the end of the video. The stop loss pip is not zero, it approaches zero. If you study limit in mathematics, you understand what I mean. When we say limit of something as something approaches something, does not mean that that thing is equal to something. Rather, it is in the proximity of in the neighborhood, like it is somehow close to. Okay, so if we risk 500 pip, if we use 500 pip to calculate our lot size, 500 pip is somehow close to zero than 3,000 pip. That's what I'm saying. Okay, now let us go to support and resistance method. Then I will go to Forex market. Support and resistance method. Now, the highest time frame we shall be using, like the lowest time frame we shall be using in this idea is daily. Okay, in daily we are looking for where market experience at least two resistance points, and it should be a line, not a zone. Like a line, not a zone. You should look for that. At least two resistance points, hoping that the third one will hold. An example is this. Now watch. See this. I'm going to place arrow on them. 1. Okay. 2. Okay. 2. Okay. And then 3. So this 3 now, you see, there is a little bit overshoot. It is assumed that overshoot is that stop loss what? Pip or limit, and it is closer to 0. But you have to measure it. It's not actually 0. If we measure this overshoot, okay, it is around, the overshoot is around let's measure. Okay, is around 500 pip. Okay, so this 500 pip for volatility 75 index is what you call 0. Yes, when they tell you that let's assume they say the earth is at 0 potential. When you are comparing the potential of other points on the earth, around the earth, and then like the you assume that okay, let's assume when we say the temperature of when we talk about sea level, that the sea is at 0, the sea level is at 0 meters, then we can measure any other point above the sea level or below the sea level. Okay, that is what it means to say the stop loss peep is approaching zero or is close to zero. It doesn't mean that certain sea level is not a high potential, but it is taken to be zero so that we can do something, we can take action. Okay, so when you take something to be zero using some valid technical method, it becomes a reality. If they tell you that a plane can fly above certain altitude, if you are not a scientist, you won't believe that. But it happens. Most of you fly from one country to another via a aeroplane. Do you know there are a lot of assumptions that make those things to come to reality? So it is still the same thing we are doing here. It is not that the stop loss limit is zero. It's not zero. It approaches zero. And so as it's doing that, something massive is happening. Are you getting it? So here we have this point, and then we have this point, and then when we have this, the third point becomes our entry. Okay, see the third point here become our entry. Now when you are entering here, you have run your calculation that look at the formula to calculate the lot size. Now let's go. Now the lot size is percentage total risk. Now you are going to risk 100% of your equity. In this case, after you have run your equity allocation, which is you divide your equity because it's the risky stuff. Now $200. Now we are going to risk $200, which is 100%. So 100% is 1 upon 200. That is $200. $200 divided by 500 pips. Okay, divided by $200 over 500 pip, bracket open, then upon p value, bracket close. Now the p value for V75 is $1, right? So if you go to calculator, you will have $200, or I'm sorry, 200 divided by 500. So we are using a total loss size of 0.4. Okay, because you have assumed this and your assumption has approached certainty, because you see it happening, and it did happen. So you are not going to open 0.4 once, or you can open it maybe 0.1 up to 4 times, so that you can close some trade and leave some to run, or you try your stop loss. Like when it have run to certain big amount, you can now use stop loss if you wish. Okay, now let me show you the profit you should have made if you did this. By the time you enter at this level and the market pushes to here, that is 11,000 pip, 11,200 pip plus upon 0.4. You have made over $4,000 plus. Now the risky part of this is that there is this drastic drawdown that can make you lose. That's why if you are entering this, make sure you, even though you have run your calculation, if you're entering it, enter it at exact 0 stop loss pip, meaning that you should enter it here. That is point action for you. You shouldn't enter it on this line, this support line. You are actually looking for liquidity grab or sweep. You are entering it here. So this is for those that have the skill. Okay, this video is taking time, but I'll go to Forex and close. Okay, and then tell you what you should do, to upgrade your trading. Okay, right now this is USDJPY. Okay, now look at this candle. I'm going to start with the one that I've formed already. Look at this candle, this one. Okay, if you were able to predict this point action, You know, a point action has zero stop loss limit. If you're able to predict this and enter at this point, hoping that this low is valid one, you enter here. You should have caught throughout the whole day, you should have caught, this is 90.7 pip. You should have caught 90.7 pip. Let's assume you have $10,000 account. Or okay, let's assume you have a $900 account. Then you divide your equity into $300. You risk $300 on this point action. Okay, now let's go to calculator. When you risk $300, remember the formula for loss size. You are going to put $300 here, and then the stop loss pip is, now you are not going to put 0 here, and then you multiply with p value. The p value of USD JPY is I will show you how to get this p value, but it is around 7 point let me take you to where to see this p value so that you will be able to get. If you want to get p value, just go to metaf.net, search metaf.net, then search for p values. Okay, you have this p value, the ones in US dollar, the ones in euro, the ones in GBP, depending on your account equity. So it is assumed that your account equity is in US dollar. Okay, so USD JPY, these are alphabetically arranged, they are in alphabetical order. So USD JPY is 6.95. These values are updated from time to time as the exchange rate changes. So the p value of USD JPY is now 6.95. Before it was 7 point something. It can go up, it can go down, but it's not all that. The spread is not much. So this is 6.95. okay, so we come here and put 6.95. now remember that the stop loss limit is not equal to 0, but it approaches 0. Now what you are going to do is, if you understand limit analysis, you have to go back to your mathematical ideas. Look at what you are going to do. You are entering this trade here. You ask yourself, what if it further goes down a little bit before it push? So you give it a very small space to breathe, like very tiny space ever you can, measurable. So this is 1.8 pip. Now there is no, I think the fundamental idea is, if you can predict where that candle open, if you know when it opens, it open here, right? And then start forming this wick mechanically, form break until you predict that this is the valid one, valid low. Then try to take 10% of the wick height, 10% of it. So if we measure here, this is the total height of the wick is 15 pip. Okay, 10% of the 15 pip is 1.5 pip. So measure 1.5 pip. We are taking 10% because we want to make this as minimal as equal to 0. So if you are entering here, you can now risk 1.5 pip. Yeah, this is around 1.5 pip, even though it's 1.7, we can tell it's still within the limit of accuracy. So we are now using 1.7, we are now risking 1.7 pip, and you are now using 25 loss size. 25 loss size. Now the problem is that you may not use 25 loss size on $300 account because the broker may not allow you to do that. Remember, we are not using stop loss. Now look at what you are going to do. Try 5, since you can easily, since by calculation you can use 25 loss size, then try 5 lots. Once you play 5 lots, if they allow you, add another 5 lots. If they didn't allow you, try 3 lots. Once you put 3 lots, if they allow you, add, keep repeating that 3 lots until they tell you that you have exceeded the volume, okay, that you can place more trade. Then relax. Let's assume that they were able to allow you to use up to 5 lots, because this is so big. The $300 is too small to run on 25 lot size. but assume that they allow you to use up to 5 lot size as maximum. Then by the time this trade ends, do you know how much you should have made? It went to around the 90 pips. Then you should have made 90 upon 6.95, which is the p value. This is the formula to calculate the profit. 90 upon 6.95, which is the p value, times the total lot size. Now you are making $3,000 plus. That means you have taken your $300 to $3,000 plus. Are you getting it? That's the power of point action. Now let's apply resistance and support idea. Resistance and what? Support idea. Resistance, remember what is a resistance and what is a support. A resistance is a level where price sell, where market sells, while a support is a level where market buys. Okay, there could be other definition of this, but this is what I want to use in this content. Okay, now if a market is trending, is better, like if a market is trending, try to trade resistance or support in the direction of the trend. So for uptrend, you only trade support. For downtrend, you only trade resistance. Okay, so you need a 2-point resistance level for you to predict the third one. So we need to be, I'm looking for them. This is uptrend, so I'm looking for such event, a 2-point resistance. Can I get one? Let me use arrow. I need to get one. Okay, 2-point resistance that hold, even if there is a even if there is repo, the repo will be equal to the limit, will be equal to the stop loss peep limit. Okay, so we can take this to be a valid support line. But the unfortunate thing is, this candle that is pulling near here couldn't touch this line. That is where you have to bring your IQ of limit. Can we get a very small peep that will be just away from the resistance line, including the repos, like this? So we are getting around 37 pip. Okay, most times you will go beyond using 10% of the wicks. Why the can, like, of the this one is resistance or support method, so you are not using 10% rule. But the truth is that with 32 pip, you can actually run your calculation of lot sizes. You can generate the lot size and run the trade. The truth is that you are following the trend. So once this trade start running, you can take the risk and say, I'm not closing, I'm going to ride this trend, and you are cashing over 578 pips, right? Now, if we go to calculator, you still have your $300, or let's assume this time around you have made $3,000, right? Then this $3,000, you want to divide it into 3 again, so that you risk, or you want to risk all of them. Whatever want to happen, let it happen, right? Because you have to be aggressive. That's what we are saying here. So this 3,000, you are not risking this 3,000, and then you write 3,000 divided by the SLP, which is that 2, and then you multiply it by p value 6.95, and then this thing, the thing have there is sudden fall in the lot size, because the previously we are using small amount of money and we are calculating 25 loss, but we cannot be able to trade it. But right now we use big amount of money, because of there is sudden rise in the stop loss peep. We are now seeing 13 lot size. Now that this 13 lot size, may not even be all used on $3,000 account. I hope you know. So let's assume they allow you to use up to 10 lot size, for instance. Okay. Now, how much do you have made if you hold long? You are making 10 lot size by 6.95 by the pip, the total pip generated 580 pip. Okay, you are making $40,000 from $3,000 account. Okay, so be good. That's all. Tell yourself the truth. Don't lie to yourself. Why should you take a trade that you are not sure? You know that if you do this trade, it will not work here. Then don't do it. You have to tell yourself the truth. Okay, see here, there is a resistance here. 2-point resistance. Let me use arrow to draw it so that from this point we have this point. The repo is not much, so we have this point. So we see, you know, that the level of this, let me use this line to do it because this thing is not a perfect horizontal line. So here we have here. Okay, so this point, this one, this point here, and then this one, but the repo is negligible. So when this one is reacting to this guy, we should have taken that trade with a SL pip of around 35 pip. Okay, and then hold long because it's trending up. Okay, so if you really want to make money in this business of trading, I tell you two things. I keep repeating it. WINFX Trading is the world global signal provider, Forex synthetic signal provider. All you need to do, I'm not telling you that you shouldn't apply the idea. You can apply it, but the truth is, are you sure you know the right one? It takes an experienced trader to get the right point, right entry point. So if you really want to cash out, if you really want to make huge money, you have to do two things here. One, enroll for courses, enroll for WFS courses. Then secondly, subscribe to our VIP signals. Our VIP signals are profit driven, infinity profit driven. You are the one holding your destiny in area of financial freedom, making money in real time. Done for you services in the VIP. All you need to do, subscribe. WFS courses, all you need to do, enroll. Change your life. Make sure you subscribe to our YouTube channel. Make sure you share this video to your losing traders, your fellow traders who are actually losing. Make sure you like so that YouTube will push us to a high level of audience. Thank you. Bye for now.